Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Sharad Dubey. And for the next 1 hour, we'll take you through all the top buzzers in the trading session, either on the back of the news flow that's coming in on them or on the back of technical charts. But first up, let's take stock of how the market is shaping up at this juncture. Sharad, nothing much is happening. In fact, we have recovered from the day's lowest point, but nonetheless, it's very sideways on the Nifty and on Nifty Bank as well. There's not much action that's coming in as far as the large caps are concerned. Right?
Exactly, Ankita. This is the second straight day of consolidation. To put it in perspective, Nifty we had a gap up opening for Nifty, but then after that there was a correction and then a recovery, and then again the market is just flat at that 25,100 odd levels. Not much coming in. And of course, Nifty Bank, yesterday we saw ICICI Bank and HDFC Bank lifting the Nifty Bank indices, but today also it is flattish but trading with a negative bias. Interestingly, the advanced decline ratio of the broader markets, that has also deteriorated. You see Nifty Small Cap 100 Index and the Nifty Mid Cap 100 Index also in the red as well. Of course, this is a stock pickers market, and largely the mid cap and small caps are showing more action when it comes to the earnings as well. But nevertheless, we could see that the markets are going into a range bound manner as we are going more into the earnings season, and also we are waiting some global cues, especially on the India-US trade deal as well.
Alright, so that's how the market is shaping up, and yes, nothing concrete that has come out as far as the trade deal is concerned. And that is, we are still in a wait and watch mode, and therefore the markets have been consolidating and being very range bound, lacking a certain direction, if you will. But let's get on board. Our research team, Rabinder is joining us, and so is Kanishka on our research team joining us for Fatafat. Thank you so much for joining us, and we'll be joined by our techie very shortly. But let's get started with all the stocks that are in focus till then. First up is PNB Housing Finance, that is in focus, that has announced its June quarter results. Reporting a net profit of 534 crores. That marks a jump up of almost 23% on a year-on-year basis, helped by steady home loan demand. The company's retail loan asset portfolio has also grown 18% on a year-on-year basis to 76,923 crores, with the affordable and emerging market segment contributing 37% to the retail book. Now, within the retail, the affordable housing loan asset grew by a stellar 143% on a year-on-year basis at 5,744 crores. Emerging market loan asset grew by 20% on a year-on-year basis, and the prime segment grew by 10% on a year-on-year basis. Now, while the company's asset under management grew 13% on a year-on-year basis, sequentially it grew 2%, and as far as the NIIs are concerned, that was also up 16.2% and up on a year-on-year basis on the back of good set of results coming in for PNB Housing there. That stock is up in a way. In fact, it has given up those morning gains, but nonetheless holding out in the green with gains of 1%.
Thanks, Ankita. And housing stocks, of course, housing finance stocks doing well in the trade as well. But interestingly, let's look at the capital markets space, and of course a strong buzz coming in, be it BSE, Angel One, or even CDSL to be specific. Now, interesting news coming in is that SEBI has removed the unconditional ban which was there on Jane Street as well. Now, the Jane Street is allowed to participate in the markets. Of course, there are some caveats. There won't be any fraudulent trading happening, and the existing proceedings which were going against Jane Street, they will be continuing as well. And interestingly, this participation may also increase the liquidity in the market, and we had seen there was a knee-jerk reaction when it comes to the capital market stocks as well. But in today's trade, BSE is holding up in a volatile market above the 2550 levels. And also, if you look at it, Angel One is one of the top F&O gainers as well, and CDSL has also traded in the green as well. So all the capital market related stocks, be it the broking stocks, be it the depository, and even the exchanges, they are buzzing positively in the trade.
Alright, so capital theme to be on the radar on the back of that news coming in on Jane Street. But serving hot today is Eternal, as well Zomato. Talk to us, Rabinder, about the numbers that it has come out with, the bullish brokerage notes that are seeing an upside of almost 18%. Take us through what the report card looks like.
Well, yes, Eternal is in focus on back of their Q1 FY26 earning, where company reported a mixed set of quarterly number, and Eternal reported a consolidated revenue at rupees 7,167 crore with an uptick of more than 70% year-on-year basis, and but company's PAT declined more than 90% to rupees 25 crore. And for Blinkit, company added 243 net store added in Q1, taking total store count to 1544 store by the end of the quarter. And brokerages has come out with the note, and most of the brokerages are bullish on the Eternal, and most of them has hiked the target price. Elara has maintained the buy rating and a hike target price to rupees 340 as compared to earlier target price of rupees 300. They say that they raised revenue estimate by 3.5% to 6% to reflect growth in quick commerce, and Nuvama also maintain the buy rating and hike target price to rupees 320. If we talk about the Jefferies, Morgan Stanley, Goldman Sachs, all major brokerages houses has hiked the target price of Eternal. So back of this bullish brokerages note, stock is in focus, and the stock is up over 12% to trade at an all-time high level, and also crosses a 3 lakh crore market cap for the first time. So back of the Q1 earning and bullish brokerage note, Eternal is in focus.
Well, 3 lakh crore mark in terms of market cap, that's a significant up move coming in for Eternal, previously named Zomato, and of course the quick commerce business is something which the street will be looking out for. But Karan Taurani, the senior VP at Elara Securities, says that the worst is behind when it comes to the quick commerce business, and interestingly he also adds that Eternal has maintained its market share despite the competition in the quick commerce. Listen in.
Well, Sachin, I think quick commerce has definitely been a headwind to some extent for the food delivery business, because I think some of that consumption has also moved to quick commerce, right? But having said that, I think we still believe from a penetration standpoint and opportunity standpoint, we still do think that long term the business can grow at 20%, although that visibility is not there for the near term at this point. But I think there's enough going for us to be excited about the business, and I think if we do well and we are able to innovate and unlock more use cases for food delivery on the app, then I think we get those 20% growth levels again.
From Zomato, the performance has been quite steady as far as numbers are concerned. It's a mild beat on the quick commerce business. The food business is largely in line with expectations. I think profitability there has been slightly below our estimates. The losses in the quick commerce is stable on a Q1Q basis. Now, this is a very big positive sign. In the last 3 to 4 quarters, we have seen losses in quick commerce increasing consistently because of price war, because of increased competitive intensity, and investments in marketing and other initiatives. So I think clearly there is a trend here that quick commerce, the worst is behind us as far as profitability and losses is concerned. And over the medium to long term perspective, you will see break-even point coming back again for Blinkit, what was about 4 quarters ago, and also profitability over the medium to long term perspective. So I think net it's a good set of results, good execution on profitability on the quick commerce side. Despite increased competition, they've been able to maintain their market share. Very interesting on the food business. Now the focus moves back to growth. Earlier, the focus was more on profitability over growth. But and a kind of guidance of more than 20% growth in the food business over the medium term in FY27 and beyond increases the confidence for food business growth prospects as well, which was quite muted until about 2-3 quarters back, wherein the growth rates were trending in the range of 15% GOV for the food business.
Interesting updates coming in for Eternal, and the market's giving a thumbs up to it. But there is a second order effect as well for Eternal's rise as well. And the stock which I'm talking about is Info Edge. The stock is up almost, you could say, more than 3% in the day's trade, and currently trading at almost 5% up. And there is a strong correlation with Eternal, and that is that Info Edge holds roughly 13% stake in Info Edge as well. One of the earliest investors, Info Edge, was there in most of the startup IPOs, and today we can see these investments are bearing returns even on their listed counterpart as well. 1465 the important levels, and the stock is up almost 5% in the trade as well.
All right, so that's Info Edge in focus. In fact, that's up and away almost 5% in trade. But let's move on to the other counter that is doing well, and that's UPL. And now we are joined by a techie also. Thank you so much for joining. us Shivangi Sada. She's an analyst, equity derivatives and technicals broking and distribution, Motilal Oswal Financial Services. Hi, thank you so much for joining us. Let me come to you first, Shivangi. You picked out UPL for us. That stock is also doing well today, up almost 1.5%. In fact, this one's been doing well and it is hovering around its 52-week high right now. Do you see more upside to this?
Yes, very good afternoon. Thank you for having me. So we've seen that this one specifically has had a good tailwind from the sector itself, and we've seen that UPL has been showing very strong follow-up action from the last 2 to 4 trading sessions, and volumes have been very significantly high, with RSI also showing positive divergence. Now, after it surpassed its previous hurdle zones of 700, it's now making a base over there. So clear role reversal can be seen here, which is a positive sign here onwards. So we're looking at 750 as the next targets for UPL, with a stop of 710 level.
Thanks, Shivangi, for UPL's call. But LIC has also been buzzing in trade, and this time they have increased their stake in SBI. Joining in is Kanishka. A little bit of more details on this.
That's right. So like you said, LIC is in the spotlight today after this insurance giant. It's increased its stake in the country's largest public sector bank. That is, LIC has increased its holding in SBI to 9.49%. That's up from 9.21% earlier. Now, this move signals continued confidence in the banking major and reinforces LIC's position as a key institutional investor. LIC is said to have invested 5,000 crore rupees through the bank's recent QIP. Now, remember, LIC purchased over 6.1 crore shares at an issue price of 817 rupees per share, and that's why the stock is in focus today. However, in that neutral trend that we are seeing in the market, LIC continues to trade lower, about 0.5% lower.
All right, moving on then to the next counter that is in focus, and that is SBI. Now, SBI has, remember that for SBI, India's largest insurance company, which is Life Insurance Corporation of India, has bet the largest fundraise, by India's largest lender, SBI. SBI has disclosed that the majority of the shares are as a part of its QIP, through which it raised 25,000 crores, were issued to LIC. Now, SBI has approved the issue of 30 odd crore shares at an issue price of 817 rupees per share on Monday evening to be eligible institutional bidders. Now, the QIP had received strong demand with interest from domestic and foreign institutions alike. The issue price is at a discount of 0.8% on Monday's closing price, and the data shows that LIC was issued 20% of the overall QIP shares worth 5,000 crore rupees, and the other prominent institutions who had been issued the shares included Societe Generale, HDFC Life Insurance, HDFC Mutual Fund, and Quant Mutual Fund. So on the back of that, SBI is in focus today. Currently, it is trading at the lowest point of the day with cuts of almost 1%.
Sanketa, we just seeing MGL's numbers coming out, and PAT numbers seems better than estimates, almost 29% on sequential basis. Sharp spike coming in MGL. Stock is up more than 2%. We will be getting you more internal details as and when we get it from our research team. But Shivangi, Interglobe Aviation is in focus. Positionally, this has been a strong up move they've given to the investors on a long-term basis. Also, there is an uptrend coming in. What are important technical levels suggesting?
So Sharad, we've seen Indigo has, till date on a year-on-year basis, it's given 30% return. And it has been one of the strongest counters from the last, 4 years, continuously making higher top, higher bottom. Even on a monthly basis, it's respecting its upward sloping channel. And on the daily frame, we've seen that there has been a good consolidation from the last 13 trading sessions, and it is now getting geared up for a next up move. So taking off for this stock, we have volumes which have added as well from the last 2 sessions. And interestingly, it is hovering near its higher band of the consolidative phase. So we are expecting a breakthrough from here towards the next target of 6150 levels and a stop of 5800 zones for this one.
All right, that's Interglobe Aviation on the charts. But moving on to the next buzzer in trade, and that's Titan. That's up more than 1% in trade. Tell us, Rabinda, what's the news flow here?
well as Titan is in focus, where Titan, through its wholly owned subsidiary Titan Holding International (FZCO), has entered a definitive agreement to acquire a 67% stake in Damas LLC, the holding company for the Damas jewelry business in the Gulf Operation Council region, from Manai Corporation, and the deal enterprise value at AED 1,038 million, which is equivalent to 2,438 crore. So back of this acquisition, Titan is in focus and the stock is trading approx 1.5%.
Well, yes, Titan is showing strength in this market as well on back of an acquisition for expanding in the Middle Eastern markets. But Shivangi, the cement space has been numbers, and of course, Ultratech Cement's numbers came. And interestingly, the pricing is stable across most of the geographies, and the Eastern India there might be a price increase as well. The cement pack volumes are strong. How are you looking at Ambuja Cement?
Now, of course, the entire cement pack has been quite a lot in action, and we've seen that the results have also, moved up and shaked up these stocks. We've seen that Ambuja Cement particularly has surpassed and very beautifully crossed its previous hurdle of 600. And we've seen that open interest has significantly increased from the last two trading sessions, with IVs cooling off, which clearly indicates that buying has been quite strong even after the breakout. So we're recommending a buy here with a target of 650 levels and a support of 610 for this one. But of course, it is now hovering near its important exponential moving averages. So it's important to trail your stop losses as well.
All right, keeping with the cement pack, moving from Ambuja to Ultratech Cement. Kanishka, tell us, Ultratech Cement, an earnings candidate, the brokerages have also given a bullish call. Take us through the numbers.
That's right. So we have an upbeat commentary coming from the management as well as brokerages for Ultratech Cement. Now, first up, a look at the numbers. Now, Ultratech Cement reported 6.5% volume growth in Q1, and in fact, the company has guided for double-digit volume growth in FY26. Cement prices, they are holding firm with increases in the eastern region especially. Now, the company's management that is focused on profitability and is aiming for 100,000 plus EBITDA per ton at India Cements by FY28. Now, the company has guided for a double-digit volume growth in FY26. Like I said, with cement prices, they continue to hold steady. The management remains very confident about strong demand and infrastructure, demand from infrastructure and housing segments, and brokerages, they are also very optimistic. Antique has raised its target to 13,750, whereas Motilal Oswal that has upped its target to 14,600 rupees, both maintaining a buy rating. Profitability is also improving, and investors are watching as Ultratech sharpens its focus on efficiency and asset optimization.
All right, moving on then from Ultratech Cement to the next counter that is in focus, and that is Brigade Enterprise. As far as Brigade Enterprise is concerned, we have the Bangalore-based real estate major Brigade Group has acquired a prime 20.19 acre land parcel in the fastest emerging Whitefield corridor of Bangalore. The outright purchase was completed at a transaction value of 588 crore rupees through Anatomy Property Private Limited, which is a subsidiary of Brigade Enterprises, strategically positioned near the major IT hubs, industrial corridors, and emerging infrastructure projects. The site is likely to be used for mixed-use development with an essential estimated gross development value of almost 5,200 crores. On the back of that, Brigade Enterprises in focus has given up all those morning gains, is at the lowest point of the day almost, with cuts of 0.8%.
With our Brigade Enterprises, the lowest point of the day, and of course the Nifty Realty is also taking a beating in the day's trade. But of course, we had spoken about the capital market stocks, especially Jane Street's ban getting lifted by SEBI. Shivangi, how is the CDSL charts looking like?
So capital market space stocks have, been the outperformers. In fact, from the last, 3 to 4 years, we've seen that these stocks specifically have been outperforming and showing resilient strength despite the market weakness. Of course, on the immediate basis, we've seen these stocks have again picked up momentum, and CDSL is forming a pole and flag pattern formation on the weekly basis. Although we've seen that all the technical indicators are also indicating that there is buying which is very strongly seen over here. And it is trading above its 50 DEMA, which is an important support level for this one. So this stock is getting ready for the next up towards 1800 levels, but of course there is important support at 1680 which needs to be looked out for.
Important levels for CDSL coming from Shivangi. But Paytm, we have seen US tech stocks doing really well in the day's trade, be it Eternal or even Info Edge. But Paytm has also jumped on the trade up 3.5% today. Q1 numbers are expected to come. They're likely to be strong, especially the commentary coming in from the management when it comes to being EBITDA positive, and also the contribution margins is something which the street will be looking out for. Now, the market expectations is that profitability is expected to improve in this quarter, and the UPI incentive and the EBITDA guidance, that will also be a key monitorable when it comes to Paytm. But today itself it's trading well above the 1000 mark, and positionally also and technically also trading well above its key moving day averages as well.
Alright, that's Paytm up and away, 3.5% in trade. But let's take a short break and come back with more buzzes on the other side. Stay tuned.